Chapter 5 deals with gross income and exclusions. And so money that you receive, is it gross income according to the Internal Revenue Code, or is it excluded? And so we'll talk about some of these throughout the chapter. And what I want to do is work on a couple of the comprehensive problems at the end of the chapter so we can see several of these items. So I'm going to start with number 73. And this is Charlie. He was hired by Ajax. And this is... get on my Excel document. So problem number 73. He was hired by Ajax as a corporate executive and a member of the board of directors, and he's got the following payments. And so it gives you that information and asks us to calculate Charlie's gross income for the current year. And so as we look at these different items, first of all, we look at the salary payments, and again we're saying, is this gross income according to the Internal Revenue Code? And yes, this is $92,000. Salary is. Contributions to pension, no. Qualified, being the key word, qualified health insurance premiums, and most jobs now do offer you health insurance. No, that is not part of your gross income. A year-end bonus, that's nice, and yes, it is included in your gross income according to the Internal Revenue Code. Annual director's fee. And so he's on the board of directors and he gets an annual fee, and yes, that is included in gross income. Group term life. And we have a note here that the face is $40,000. We have to know that information, and so no, that is not included. Whole life, and we have a note that the face is $100,000, and so yes, a portion of that is $1,420. And then disability insurance premiums is not included. And so his total gross income that we will report and should get on a W-2 from his employer. And I have lost my sum button. There it is. Is $118,420. The whole life premium, you'll have to look back in your book. It'll show you how to calculate that. Let me see if I can find it quickly for you. If I can't, then I might show it on the next video, but I can assure you it is in the chapter on how to calculate life insurance premiums. It should be over... Okay, I had to pause the video. It's over on page 524 in Exhibit 5.3. There's lots of information there, but that's where you'll find what we base the decision for the life insurance. It has to do with the face value of life insurance, and the premiums that were paid were $1,420. Okay, then it asks us in Part B, suppose that Ajax agrees to pay Charlie an additional $100,000 once Charlie completes 5 years of employment. Will this change our answer? No. The promise to pay in the future does not impact taxable income to a cash basis taxpayer. So that income won't be recognized until it's paid. In question C, it says, suppose that in exchange for his promise to remain, Charlie is paid 4 years of director's fees in advance. So what does that do? So that will actually increase his taxable income when it's received, regardless of when it is earned. He's a cash basis taxpayer. And then in D, let's see, it says, assume that in lieu of year-end bonus, Ajax transferred 500 shares of Bell stock to Charlie as compensation. So is this compensation? Yes, it is compensation. Further assume that the stock was listed at $35 per share, and Charlie would then sell the shares by year-end, at which time he expected the price to be $37. So $35 is his basis, $37 is his sales price, and what does that do to his gross income? So he would actually show the 500 shares, stock received. He would show the 500 shares at $35 per share as compensation, so that's $17,500. And then he would have a gain. It's 37 minus 35 times the 500, And if you're putting that in Excel, you're going to have to do a little bit of formatting, but I'm not. And so he's got a $1,000 gain on sale of stock, and that is a short-term gain. He didn't hold it. He sold it within the year. And then finally it says, suppose that in lieu of year-end bonus, Ajax made Charlie's house payments for a total of $23,000. Does that report it as compensation? And yes, it is. Charlie would report the value of the house payments as $23,000 as part of his income. So yeah, that's the way we look at these and trying to determine. But that chart on page 524 is probably the best place for you to refer back. Okay, now I want to look over at problem number 75. And so this, the one we just looked at, is kind of an employment package. And this one just kind of has lots of different things in it. I'm not going to do the tax returns, but I am going to just kind of walk you through the numbers and talk a little bit about this terminology. So Ken is 63 years old and unmarried. He retired at age 55 when he sold his business. And so he's retired at 55 and he sold his business. And he is very active. He reported the following financial information for this year. And Ken is a single taxpayer. And it asks us to determine his gross income. So we'll just look at each one of these individually. Ken won $1,200 in an illegal game of poker. So he played it in Utah, where poker is illegal. However, the IRS tells us, the Internal Revenue Code tells us that regardless of its illegal income or not, it is included in gross income. So illegal poker income is included. Ken sold 1,000 shares of stock for $32 a share. He inherited the stock 2 years ago, and his basis at the time was $31 per share. So he will recognize the gain based on the basis of the stock when he inherited it. And so it would be the $32 sales price minus the $31 basis times the 1,000 shares of stock. And so he's got a $1,000 gain on sale of stock. Okay, and then we've got Ken received $25,000 from an annuity he purchased 8 years ago. He purchased the annuity to be paid annually for 20 years for $210,000. So he's got a basis in it. And so what we want to do is we want to take that, right here, this $210,000 basis and divide that by 20. And that will give us, I've got that written down. No, I don't. Let me calculate that real quick. It's got 210,000 divided by 20, so 10,500. That's his basis. And so he's getting 25,000. So 25,000 minus the basis gives us 14,500. And that is what he's going to include in his gross income as an annuity. Okay, so we figure out what the basis is per year, and then we subtract what he received from that. And the difference is his investment, the interest that he's earned. D, Ken received disability benefits for the year. He purchased the insurance policy last year. Key word is that he purchased it. And so because he purchased it, 0 is included in his gross income. Ken decided to go back to school to learn about European history. He received a $500 cash scholarship, and he used $300 to pay for his books and tuition and used the rest toward a new car payment. And so the $200 actually does not qualify as an exclusion. The $300 for books may be excluded, and so he has to show $200 of that scholarship in his gross income. Ken's son Mike instructed his employer to make half of his final paycheck of the year payable to Ken as a gift from Mike to Ken, and Ken received that on December 30th. So on the assignment of income doctrine, which is what his son is trying to do, the income is taxed to the taxpayer who earned it, not the taxpayer who it was gifted to. And so 0 of that is included in Ken's, but the entire amount would be included in his son Mike. And so this is assigned. Sorry about that. So the assigned, I can't remember where I was now, but the assigned income is not included in his gross income. And so then it says in G, Ken received a $610 refund of the $3,600 in state income taxes employer withheld last year. He claimed $12,050 in itemized deductions last year. And it tells us that the standard last year was $12,000. And so the portion of the refund that he received tax benefit from, so that's why we have to know what the standard was. So the tax benefit he received from itemizing was $50. And so he doesn't include the full $610, just the benefit he received from that, which would be limited to $50. And so it's the smaller of the benefit he received of $50 or the tax refund he received of $610. And then finally, he received $30,000 of interest from corporate bonds and money market accounts. And yes, this is included. Some bonds are excluded, but that's only government bonds. And this one, it tells us, is corporate bonds and money market accounts. And so that is included. Okay, so that kind of gives you a really good overview of Chapter 5. If you have any questions, let me know.